I'm like most of you in this room, I think, from what Caroline explained to me about your backgrounds. I've been a small business owner pretty well ever since I left university. And what I know about being a small business owner is that it can be pretty risky, because not like a big corporation, if we want to do anything in our business like borrow money, have a lease over a building, get some capital or some finance, get an overdraft facility, then normally the organisation that's providing us with that ability will require us to provide some kind of personal guarantee. So we will have to normally put our assets on the line. Even if those assets are in a trust, the lender or the banker will normally ask the trustees to also provide guarantees. So one of the things that makes small business different to bigger organisations is that our personal assets become critical to almost every facility that we can obtain while we are in business. In addition, what we find in most small businesses is that the surplus that is generated, no matter what your entity is, you might not be a retailer, you might be a little manufacturing business, or a sales and service business, or in real estate or insurance. You could be in any range of things. So this is just a kind of an example. But for most of us as small business owners, the business makes a surplus over our costs, and that surplus is our primary source of income. We may have other sources of income. We may have passive income from investment properties. We may have another partner in our personal life who is working. But the business becomes quite an important source of income into the family unit. And that revenue, or that income that we're generating, is normally what we use to live our lifestyle and to grow our wealth. For most of us, one of our objectives around our business, and my experience, is that one day when I want to retire, I'll be able to sell that business for some value, and that, along with other assets that I have created, whether it's investment assets, a KiwiSaver, or stock assets, or whether it's property, it's the bundle of all those things that we see as making up our wealth for our retirement. So the business often plays an important role, not just in giving us a lifestyle today from income, but to help us actually grow our assets, either through our business or other, what we kind of call off-farm or off-business assets. Ordinarily, the business will have some debt from a lender, whether it's capital finance or whether it's a bank. And normally for us to get that kind of borrowing, then we've provided personal guarantees over our property. So why we think about it as being risky, that all the years that I've worked with business owners, and it is some 30 or so now, in my experience, for most of those small businesses, if we take the business owner out because of an event of disablement or death, then the business will reasonably quickly start to collapse, because the revenue that is being driven out of this business is actually being done by the owner of that business or somebody else very close to that owner who may be important. So it may be more than one person who is key, but often in a very small business we find that the business owner is absolutely critical to the survival of that business. So if we take that individual away, even in quite a short period of time, in our experience of working with business owners, what we find that within a month, 2 months, 3 months, for many of those companies, the revenue might have dried up completely, and then the business is going to start falling apart. The difficult thing about that, if we are a small business owner and we've given personal guarantees to the bank using our assets, is firstly, if we can't, or if we're defaulting on those borrowings, then we may find ourselves in a situation where the bank or the capital finance or the landlord actually calls up those guarantees, and so that destroys our wealth because our assets are what they sell to repay the debts. But also, if this surplus and this income that is being derived is essential for maintaining our lifestyle, for instance, paying off our mortgages, having our children go to school, feeding ourselves, if that cash flow isn't there, then our lifestyles are likely going to have to change as well. So we think of this world of the small business owner as being very risky, and it's very risky. Its most highest risk, in fact, is normally around the business owner and other really important people in the organisation.